It's another half hour of markets analysis and insights on Business Incorporated live from Channels TV Lagos. Here's what's coming up. OECD warns global economy risks losing momentum. Kenya High Court suspends ruling on housing levy in the country. And Morocco to prolong wheat import campaign to April next year. Hello and welcome to the program. I'm Will Ibang. Let's kick off as always with market numbers. First up, major equities in Africa. Let's see at intraday how major equities were trading. So it's mostly negative, I can tell you that. Nigeria's EGX was down 129% at intraday. It's lost that 25,000 level. Let's look at what Kenya did on Tuesday. It was down 1.38. It was up 1.38% for Tuesday's trading session. Let's see how Nigeria and South Africa performed at intraday. Nigeria was up 0.14% and South Africa, on the flip side, was down 0.25%. Now we'll move on to the Middle East, where markets were mostly in the red. At intraday's red. Let's look at the Abu Dhabi index. There is really down for the Abu Dhabi. Let's see what the markets are doing for the Abu Dhabi index. We see it down 0.12%. Dubai also down 0.22%. Let's see how other markets are performing. Saudi and Qatari also down at intraday 0.15%, and Qatar down 0.15%. Similar margin at intraday. Now in the UK, it's still a cost of living crisis ahead of Christmas, as competition watchdog says shoppers are being overcharged for branded goods, including baby formula and baked beans. Juliana Olayinka is right there in London with the details. Juliana, in times like this, when households are struggling amid continuing cost of living, it's quite saddening to know that they are being ripped off. Has the CMA got any plans to stop this price manipulation?
Hi, Will. Unfortunately, I'm having to kind of lip read to hear you because I've got about 5 different voices in my ear. But going into my magic ball, I think you're talking about the Competition and Markets Authority and their latest probe looking into supermarket inflation in the UK, which has come down significantly since the hikes we saw in March. I think at its peak, supermarket inflation was running at about 19.6%, which is, of course, very, very difficult for consumers here, because everybody has to eat. As a result of intervention from the government, the Competition and Markets Authority, which does look at food prices in the UK, they decided to do a probe to see why it was taking so long for some of the discounts we were seeing at wholesales to trickle down to consumers. And I think nobody really is surprised to see that some supermarkets have been profiteering. In fact, some of the biggest brands in the UK are charging double, in fact in some places triple, than what the price should actually be. So if you're a fan of baked beans, mayonnaise and pet food for your pet, of course, then you would have seen that compared to other prices, those prices remain staggeringly high. But I think there was one worrying development in the CMA's probe, and that is the price of infant formula, which is basically baby food. I think in the UK there are probably only about 2 brands that dominate 84% of that market, whereas with things like baked beans and mayonnaise, you know, if you don't like the price of some of the main brands, you could get a cheaper alternative. But unfortunately for baby formula, it's really difficult if there are only 2 brands dominating that market. So I don't think there are any surprises in the announcement that was made by the CMA. However, they have decided that they are going to investigate a little bit further what exactly is happening with the price of infant formula, because there's nothing like being a new mum, not having enough money in your back pocket, but then also not being able to afford the formula. So that's the findings out of the United Kingdom this morning. Well,
it's really sad, Juliana, because parents having to pay £500 extra in the first year, new parents struggling to pay that. I can only imagine what is doing that dent to their pockets. So now we're looking at Amazon. The company is in the news again, but this time not for strikes, luckily, but because the company says it's about to launch a business chatbot called Q. Help us understand how Q will or may not be different from its AI rivals.
Yeah, I'll try to break it down. I'm not a techie, but I have been listening to Amazon on the news all day because, of course, as you quite rightly said, they have launched this new artificial intelligence chatbot-esque innovator, should we say, called Q. Now, this is not for Amazon where you would buy your cheaper items. This is actually Amazon Web Services, which, of course, we know is a platform that provides data and analytics and administration services for government and corporates. Now, we know since OpenAI launched chatbot, AI being able to design your website, being able to generate a presentation from you has taken the internet world by storm, but particularly with some of the big tech firms, because we know that OpenAI is partly owned by Google. We know, of course, with the big tech giants, they are incredibly competitive, which is why AWS have now decided to launch its own version of that, which is Q. I suppose this is quite similar to what Amazon has been offering in the past. I think anybody who is very familiar with Amazon knows that it has Alexa already, which is some sort of virtual assistant, not necessarily AI, but of course, once you're constantly telling Alexa what to do, it generates algorithm and it does use AI to kind of decide when you do want to wake up, when you do want to make sure your fridge is closed, etc., etc. But I think now with Q, they want to tap into a very lucrative industry, which is artificial intelligence, and government officials and organizations are going to be able to use Q, which is similar to kind of a chatbot. So anybody who doesn't want to be on the phone for hours listening to boring elevator music can just simply go onto a website, use their chatbot. You won't be speaking to a real person. But now artificial intelligence is becoming so strong, and they're able to collate so much of your data that really, even before you say that you want anything, they're able to provide it for you. In fact, I'm sure, Will, and we should test this with viewers tomorrow, perhaps when we get off air, I'm sure there'll be something within our phones that is going to listen to what we're saying and perhaps asking us to purchase it. So it's a big business. In September, Amazon said that it'd be investing up to $4 billion in an AI startup, Anthropic, and now that it's launched Q, it's just showing that it's ready to compete with others in the take-up of artificial intelligence. Listen, I've got to do more reading, Will, to get up to scratch with AI. It really is dominating. But I'm a real person, which is why there's lots of ifs and buts when I talk. Humanity may miss that in a few years.
Of course, we do have to stay human. And I look forward to Q. And it sounds interesting for what you said. I'm just looking forward to it, wishing Amazon all the best, and seeing how, consumers will accept this, welcome this development. But something interesting also coming out of the UK, there is Saudi Arabia's public investment fund has agreed to buy a 10% stake in Heathrow Airport. How are markets reacting to this?
Yeah, this is a massive story. In fact, it's still developing, so we have to get more information from bosses at Heathrow. Heathrow Airport, of course, Europe's busiest airport. They have announced that the Saudi Sovereign Fund, otherwise known as the Saudi Public Investment Fund, will indeed be buying a 10% stake in Heathrow Airport. Now, the sale is actually coming from the huge Spanish infrastructure giant Ferrovial, who has actually been Heathrow's largest stakeholder for several years now. Last month, Heathrow revealed that I believe 19 million passengers passed through its terminals. Now, year on year, that is a 19% increase. Of course, not just Heathrow, the world's biggest terminals suffered significantly during the cost of living crisis, and during the pandemic, and there were concerns that off the back of the cost of living crisis, people will stop traveling. That's not happened. You know, people are not happy to do a Teams or a Zoom. They want to see people face to face. The business community are really boosting airline travel at the moment. We had significant data from EasyJet showing that they had a bumper summer, and clearly the Ferrovial want to strike while the iron is hot. So they have announced that they'll be selling a 25% stake. The Saudi Public Investment Fund are taking 10%, and a French firm, Ardian, they are going to be taking a 15% stake, I believe, to the tune of £2.4 billion. This is quite massive because we have had a lot of Middle Eastern investment into the UK. I believe the Qatari investment fund may be the owner of a Premier League football club. There were suggestions that the Saudis may also be interested in purchasing Manchester United. So this is a great news for investment in the UK, but particularly Heathrow, of course, because they've been battling with their rivals to remain Europe's busiest airport. Has this reflected into the numbers at intraday? Not exactly. We have the OECD report, the Paris forecaster, saying that UK growth is likely to be stagnant this year and next. Not great. That's trickled through. The FTSE All-Share will at intraday. It's down by 0.03%. The FTSE 100 down at 0.09%. The FTSE 250, the domestic market, up slightly by 0.30%. In the currencies market, the British pound also down against the US dollar by 0.09%, though up against the euro by 0.10%, and up against the Japanese yen by 0.07% at intraday. Will.
Thank you so much, Juliana, always bringing the facts behind the figures.
Trying, thank you.
Now, in a major policy shift, the West has for the last few months put some efforts in de-risking their economies from China. The EU has taken the lead. The US has been following. But Laz also is with Berlin, and he joins me to share more information about this. Laz, how is this de-risking affecting the Chinese economy?
Yeah, thanks for having me. Well, the main problem for Russia is that it almost seems like they weren't really considering how they too depend on Western economies in many ways. Sure, Putin knew that with his war effort in Ukraine, he would risk losing his European customers, and he would likely have to find other partners to sell his oil to, or natural gas for that matter, as he did, by the way, with much of Russia's oil now going to China and to India. However, the problem is that the oil trade has for decades been a dollar denominated, and with American sanctions levied against Russia's trade, Moscow has tried to avoid dealing in greenbacks. But which currency should you use now? The problems really came up when India, which has become Russia's biggest buyer of seaborne oil, insisted on paying in rupees, and the trading activity nearly fell apart. That was after informal guidance came from the Russian central bank that it would not accept the currency. The thinking behind this is the central bank says receiving revenue in a currency with little value outside India was, quote, pointless.
Is there any hope for Beijing that recent trends could reverse?
There's been a bit of a workaround as of now, because Moscow came under tremendous pressure. That's after two major Russian oil companies threatened to divert a dozen India-bound tankers carrying up to 1 million tons of oil to other destinations if no payment option outside using rupees could be established. So as a temporary solution, the cargoes were paid for in a combination of the Chinese yuan, the Hong Kong dollar as a transition currency into the yuan, and the UAE dirham, which is pegged to the US dollar. Now that's obviously a bit complicated. Also because India is not the only customer with the currency problem. Buyers in Africa, China, and Turkey are also affected by all this, albeit as a lesser rate, because India is currently buying more than 60% of Russian oil. So they'll be working on this some more, I'm sure, but it's safe to say that the dollar won't be back in terms of trade in Russia, and that's for two reasons. The Russian central bank cannot operate in dollars because of those sanctions, and while Russian exporters theoretically can use the currency, avoiding it has the advantage for them of making it harder for the United States and other Western governments to monitor their trade.
So what are investors looking for in today's markets?
Well, this week, once again, we're waiting on some more U.S. inflation data for a better look here, but we're also looking at some consumer news. That's because we are now done with Black Friday and with Cyber Monday. That, of course, was yesterday. And at first glance, the numbers say that consumers spend around $12 billion in the U.S. just over that online shopping day, and that is a new record. Now, when I say online shopping, we're not just talking about Amazon and other online retailers, but really all of the retail sector, but only their sales through their respective websites. Walmart and Target are included there, and all the others. Now, these big brands, despite their good sales numbers, are all cautioning on the strength of the consumer, citing higher interest rates and depleting household savings. And they're basically saying we're good for now, but nobody knows how long this lasts.
Thank you so much, Laz, for that update. Now, the Organization for Economic Cooperation and Development, OECD, sees 2.7% global GDP growth in 2024 versus 2.9% in 2023. According to the OECD, growth is losing momentum in many countries and won't edge up until 2025, when real incomes recover from the inflation shock and central banks will have begun cutting borrowing costs. The Paris-based organization warns that the world's advanced economies are heading into a deepening slowdown as markedly higher interest rates take a hefty toll on activity that could still become more acute. Now, Kenyan High Court suspends ruling on housing levy. That conversation next. This is Business Incorporated. Now we kick off with Morocco, where the country will offer subsidies to import up to 2.5 million metric tons of soft wheat between January 1 and April 30, 2024. And that's according to the State Grains Agency, ONICL. And this comes as the North African country pursues an import program to offset drought-affected local production after drought reduced its domestic wheat crop for a second year. Morocco has launched an import program for the 2023 and 2024 season, covering up to 2.5 million tons for July to September, followed by a second round for October to December, allowing up to 2 million tons. Now to Kenya, where it's a win for salaried workers, as High Court declared the housing levy proposed by the government as unconstitutional. However, the High Court has suspended the judgment until January the 10th this next year. The housing levy is among the tax measures that was introduced in the 2023 Finance Act amid the high cost of living crisis. Mercy Milanoy, business reporter from Kenya, joins us from Nairobi with details and developments on this story. Good afternoon, Mercy. It's good to have you on the show. Mercy, what is the housing levy and why was it deemed unconstitutional by the High Court?
Well, thank you for having me today. Well, the housing levy, as you clearly stated, it is under the Finance Act of 2023 that was introduced to help us achieve the goal of affordable homes. Now, affordable housing, as it's commonly known, began with the previous government, which had an ambitious Big Five agenda, and one of them was affordable housing. Now, to achieve this, there had to be a way of financing this particular project. So now, the Finance Act, now that is known of 2023, was revised, taken to Parliament, and it was passed. So under this act, we find that both employees and employers must pay a monthly affordable housing levy of 1.5% to employers' gross salary. So every employed person in Kenya has been contributing to the affordable housing levy. Now, the funds ideally are collected and that to be used for development of affordable housing. Of course, they need social and physical infrastructure, as well as be able to finance affordable home for Kenyans. Now, it was deemed unconstitutional because there has been a lot of debate with the housing levy, because now there's only one factor of the entire population that is contributing to this levy. So the question has been, why only the employed? And of course, when this went to court, the judges, Judge David Majanja, said that for now it was deemed discriminatory and unfair because it is only applied to those with formal jobs. And we have a whole population that has informal jobs. So you can't have that only those with formal jobs are the ones who are contributing to the housing levy and to the affordable housing that will benefit each and everyone, including those in informal jobs. And just to give the context of where this came from, you find that there is an annual deficit. There's an annual demand for affordable homes at about 250,000 units. What is being able to be met is only 50,000. So we have about 2 million units deficit of affordable homes here in Kenya. And the whole goal of affordable homes was to ensure that every Kenyan has somewhere affordable to live. But you find that now with the housing levy, it has been very heavy on only the only the people who are employed, and thus the courts now move to declare it unconstitutional. But of course, Kenyans can't celebrate just yet, because now the Kenya Revenue Authority, the leader of majority in Parliament, went to court, and of course they've pleaded for a 45 days stay. So this will give the government time to move to the Court of Appeal and of course put things in order and to address on the issues that the High Court brought about that led them to declare it unconstitutional.
Okay, so they declared it unconstitutional, but it's been suspended, and then Kenyans will have to continue paying this levy for another month. Why is that?
Well, now, after the court said it was unconstitutional, the government lawyer, the Speaker of the National Assembly, the Attorney General, and the Kenya Revenue Authority also moved to court to plead their case. So basically, the court gave them 45 days. So the suspension has been lifted for only 1 month until January 10th. After that, it's either the government comes up with a way to, either the government finds a way to address the issues, of course, that were brought forth by the court, which is find a way to put more people to contribute to the housing levy, because as of now, it's only contributed to only the employed and those people with formal jobs. So, and this project is supposed to benefit each and every Kenyan. So it deemed unfair that only the employed people are contributing to a project that will benefit the entire population, including those unemployed. So what happens to those who have informal jobs and they're making money? They're not contributing to the housing levy, and there is no formal way that the Kenya Revenue Authority or the government itself have found a way to make them accountable of contributing to the housing levy. So the other thing is that the Federation of Kenyan Employers has been loudly and very aggressive in terms of, stating the effects of the continued taxes under the Finance Act, including the housing levy, that has had a negative impact on the employment industry. You find that very many employers are grappling with meeting all these tax demands. So it's either we're going to see layoffs or we're going to see a freeze in employment. So with this now, for this particular 1 month, the government needs to find a way to either increase the bracket of of those contributing to the housing levy outside those who are employed, or now the court will now deem it unconstitutional permanently. But as of now, the key parties in government, that is the Kenya Revenue Authority, the Attorney General, and the National Assembly, the Speaker, went to plead with the court to be given some time to be able to give the government some time to put things in order, and then now we will have the final judgment on January 10th.
Okay, but has there been any public reaction following this judgment between yesterday and today? What has been the public reaction to this?
Well, we celebrated for a few hours before it was suspended again. Kenyans are really glad that, it was suspended because as of now, 2023 has been quite the tough year for Kenyans in terms of economy. The economy is not doing well. The taxes are quite heavy. There are a lot of measures that have been passed by Parliament that have really hurt the pockets of Kenyans. And since the enactment of the Finance Act of 2023, it's been taxes and taxes and taxes. And you find that, like right now, our oil levy was doubled. There's the high cost of power. Right now, Kenyans are functioning on a really high cost of living. So definitely, the suspension of the housing levy came at a really good time, and Kenyans were happy. And for now, we are just hoping that the court will be able to put the government to accountable. That if by January 10th, if they are not being able to see how they can be able to increase the bracket of those contributing to the housing levy, then they suspend it, because it is unfair to really put only the employed people, those who in formal employment, with the burden of contributing to the housing levy alone.
So, but what other taxes are affecting Kenyans currently being levied on them?
So all these taxes are all under the Finance Act of 2023. And on top of that, you find that the Kenyan Parliament also passed the doubling of the double taxation of oil. So you find that it went from 8%, the VAT from 8% to 16%. And we've been functioning on high cost of fuel. It is actually even the highest right now in a really long time. You find also the Kenyan shilling has not been doing well. It has been aggravated by the situation. Of course, businesses that highly depend on imports and exports have been really affected. You find the high cost of power. The cost of power is really high, because you find that if the cost of fuel is high, then definitely it translates to the cost of power. And basically, the tax measures overall have led to the economy struggling a bit. And recently, the Federation of Kenyan Employers released a report where they stated that 3% of Kenyans have lost their jobs in the formal private sector. We find that over 70,000 people have lost their jobs, and this is just in one span of 1 year alone. And so the continuous enactment of these taxes under the Finance Act continue to hurt the economy, but also Kenyans are just a bit hopeful things will get better. But Kenyans are just hoping that the government plus
we need to stay hopeful.
Back to the drawing board.
We need to stay hopeful, Mercy. Definitely, we'll hope that these conditions or situations get better. Thank you so much, Mercy Milanoy, business reporter from Nairobi, Kenya, for sharing those insights and keeping us up to date. And with that, we bring an end to this edition of Business Incorporated. To join us tomorrow for another edition, I am Will Ibang. Thanks for watching.